Hello, friends. Welcome to OAVA's weekly update on money and markets. We begin with a grim, sudden geopolitical crisis event. Last week, Hamas, a Palestinian militant group that controls the Gaza Strip, launched a multi pronged, unprecedented attack on Israel through air, land, and sea. More than 1,000 people are reported to be killed by Hamas in Israel and scores taken as hostages. Israel, in turn, has launched a major counterattack, declaring war and vowing to destroy Hamas, and in turn, 1,000 plus are dead in the Gaza Strip as well due to Israel attacks. The US, UK, India, and several other countries have expressed support and solidarity for Israel, while Iran has expressed support for Palestinians. The fallout of Israel Hamas war on the global economy may take time to become clear, but would become more severe if the conflict spreads to the rest of the Middle East, especially Iran, which is both a major oil producer and supporter of Hamas. If the conflict intensifies or spreads, crude oil prices can breach the $90 mark and move towards $100. High energy prices and new inflationary trends could undermine the efforts of central banks to bring inflation under control. This can see interest rates at an elevated level for a prolonged period. Some risk of sentiment was also seen with gold prices briefly moving up during the week. For now, domestic equity markets have by and large remained relatively unaffected. On the whole, caution is advised for investors. Moving on to news about another major economy, during the week, news agencies reported that in a fresh effort to shore up the slowing economy, China is considering raising its budget deficit and mulling the issuance of additional debt for infrastructure spending. If the measures materialize, they would mark a shift in the government's stance towards broader fiscal stimulus and offer investors a major confidence boost. The news has led to some rise in Chinese stocks listed in Hong Kong, especially property developers. Whether any potential stimulus will be enough to drive a sustainable rebound in equities remains in question, as the nation is still battling a number of headwinds, including a long term property crisis. China needs a forceful response by officials to restore confidence in the real estate sector, the International Monetary Fund, that is the IMF, had said recently. Moving on to domestic news, India's latest CPI, that is Consumer Price Index inflation data, was released on October 12. CPI data came in at 5.02% for September, down from 6.83% the previous month. Vegetable prices have softened considerably and was one of the main reasons for the fall in inflation. RBI has been keeping key rates steady for past few months, with the policy rate at 6.50% and is unlikely to reduce rates so long as inflation remains above the stated target of 4%. Some economists feel that despite the sharp drop in the headline inflation, the food inflation threat was far from over given that India recorded its driest monsoon in 5 years. India received only 94% of its long term average rainfall, with uneven distribution across the country, as some regions experienced floods and others drought like conditions. Moreover, the ongoing geopolitical tensions can keep crude oil prices elevated as well. For this reason, RBI is expected to keep an extended pause and interest rates may remain elevated. Moving on to news about one of India's leading airlines, Go First, which is in the bankruptcy process. Three entities had submitted EOIs, that is, expressions of interest, to bid for the airline, of which that of Jindal Power has been accepted. The power generation company will be conducting proper due diligence and post which it could submit a formal bid. Go First's former owner, the Wadia Group, has not shown an intent to bid for the grounded Indian airline and has stayed away from the insolvency process so far amid an ongoing legal tussle. Cash-strapped Go First had filed for bankruptcy in May 2023 blaming faulty Pratt and Whitney engines for the grounding of about half its fleet. And finally, we end the week with news on the Nobel Prize. The Royal Swedish Academy of Sciences has decided to award the 2023 Nobel Prize in Economic Sciences to Claudia Goldin for having advanced our understanding of women's labor market outcomes. Golden, a Harvard University economics professor, was the first solo woman to win the prize in economic sciences and the third woman to win the honor in its 55-year history. The extensive study done by Claudia over a 200 period showed that female participation in the labor market did not have an upward trend over a 200 period but instead forms a U-shaped curve. The participation of married women decreased with the transition from an agrarian to an industrial society in the early 19th century, but then started to increase with the growth of the service sector in the early 20th century. Golden explained this pattern as the result of structural change and evolving social norms regarding women's responsibilities for home and family. Economists feel her research has led to a better understanding of the forces that help women advance in their careers or hold them back. That's it for this week from us. Do click like and share if you found our content useful, and do visit our website www.oava.in for information on our courses. See you next week.